Hi guys, Andy Harrison's here. I just want to take the opportunity to address a quick 5 questions of which I've been getting asked a lot recently with regards to the sales market and the potential opportunities that may arise throughout the rest of the year. As always, if you'd like to speak to me directly and I can give you more personal advice, feel free to reach out to me personally. The story of 2020 so far is that we saw a nice strong recovery after the Brexit news broke in Q1. And of course, since the COVID outbreak and the lockdown, effectively the market's been on pause. We're now starting to see an upsurge in sales inquiries, and we've recently just seen Home Search report that 80% of movers still plan to proceed with their move after lockdown. Of course, there has been some pent-up demand now for a couple of years during the Brexit process. We had seen a strong upturn at the start of the year. Now we're in a position where we're coming out of the lockdown, viewing restrictions are easing. It's too early to say if there's been any value movement, but what I can tell you is that it is expected that transactions may slow. So timing and strategy, if you are looking to market, is going to be paramount. What we have seen is we've seen an upturn in buyer inquiries. We've also come out of a fairly stagnated period over the last couple of years with Brexit. So there is still a lot of market confidence, there's still a lot of buyer demand, and ultimately lifestyle choices still need to be made. There will naturally be less competition in the market post-lockdown, as some people will delay their decision to 2021. Of course, there is some uncertainty for some of the market. So that will allow the people that are serious and in the market, that will allow them an opportunity where there's less competition and potentially more choice. Of course, we're still seeing a bit of a fallout in terms of landlords that are keen to leave the market due to increased taxation and regulation. There is typically a little bit more available supply than there usually would be at this time of year. Interest rates are at an incredibly low point at the moment at 0.1%. Of course, we understand that the loan to value products now are back to sort of pre-lockdown norms, around 65-75% as an investment and up at 90% as a residential. So with the interest rates still, the Bank of England rates still incredibly low, we would expect to see some products that enter the market which will reflect that in the coming months. So it could be a great opportunity where you have slightly less competition, more available supply, and of course finance and lending criteria is at a record low. From a limitations perspective, you still have some mortgage lenders that are still offering shallower loan to values, but as I mentioned, that there are also a lot of products now that are coming back to sort of pre-lockdown norms. We are expecting transactions to slow slightly through the rest of 2020, as a lot of buyers will be putting off decisions and have already made sort of short-term solutions because of COVID. So there may well be a chance that if transactions do slow slightly, we may see a small dip in values. But what's very important to understand about that is that fundamentally this is a very different crisis to, for instance, say the global financial crisis in 2008, where we entered off of a boom cycle and prices were very inflated in 2006, 2007, and therefore there was a big correction in 2008. We haven't seen that leading up to this crisis. It's actually been quite a stagnant market throughout the Brexit sort of debacle, and there's a lot of pent-up activity and pent-up demand. So even if we do see slower transaction numbers, there may be sort of a few points movement down. If you look at all of the trends and you look at the fundamental underpinning of the current economy, it's widely anticipated that we are going to move into a boom cycle into 2021 and 2022. But as always, when you're looking to purchase assets, and particularly if you're looking from an investment perspective, it's very, very, very important that you buy well and you buy with the end in mind. From an investment perspective, you buy while assessing the demand, and there are plenty of high yielding opportunities out there at the moment for the right investment purchaser. What I expect to see is transactions may slow slightly in terms of volume, but values remain fairly consistent. Once the Brexit decision was made, we saw from January through to March, there was a big spike in terms of sales transactions as that pent-up demand started to come back to the market and take shape. As we move into the rest of 2020, we're expecting a similar effect. We're expecting to see the initial pent-up demand come back to the market quite strongly, but then tail off through the rest of the calendar year, moving into a boom cycle in 2021 and 2022. Hope you found that useful, guys. As always, with all markets, there are opportunities and threats everywhere. And if you are looking to expand your portfolio, I can point you in the right direction to some high yielding assets. Whatever your sales and investment motives may be, anything that you need with regards to the property investment space, feel free to reach out to me directly. Take care.